Hello, everyone. Welcome back to a brand new episode of Tech This Week. My name is Apalak. Hope all of you are keeping well. So, today I want to talk about a headline from the world of technology. And I'm sure you would have probably heard about this. So, big news in the tech industry: Anthropic's valuation recently surpassed that of OpenAI. Big news, right? And almost immediately, the narrative became, Anthropic has overtaken OpenAI, cloud has beaten ChatGPT, and a new leader has emerged. And but that's got me thinking, why do we automatically assume that a higher valuation means a better organization? And for that, we need to first question, because for many people, they already understand. For people like me, I thought, and I'm sure there are a few like me, we need to understand, what does valuation exactly measure, right? Because most explanations about Anthropic's rise to 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 its dominant position today is its focus on enterprise adoption. The argument goes something like this: when we think of AI, most natural company that comes to your mind first is OpenAI. So OpenAI won consumers. That's the top of the mind recall OpenAI has with ChatGPT as far as the consumers go. Anthropic, on the contrary, won enterprises. So while ChatGPT became a household name, Anthropic quietly became deeply embedded in software development, coding workflows, research assistance, and enterprise AI deployments. And because enterprise customers spend significantly more than consumers, investors rewarded that growth. There is, so this is where we are. But I don't think that's the most interesting part of the story. That's a more obvious story. If anybody who knows a little bit of AI would say that ChatGPT won the consumer space and Anthropic won the enterprise space. The real question isn't why Anthropic's valuation increased. You know, the real question is, why do we treat valuation as an objective benchmark in the first place? Because valuation, and this is where I did my reading, and that's where I understood that valuation and value are not the same thing. A valuation does not tell us what a company is worth. It tells us what investors collectively believe, quote unquote, a company could become. And those are two very, very different things. One, which is value, measures reality, the other measures expectations. And you know, history has been filled with moments, where markets became convinced they had a future. And one of the best example that comes to my mind is the dot-com era. Every company started adding .com to the names and saw their valuation surge. During the blockchain period, remember, simply mentioning crypto initiatives attracted investor attention. During the AI boom, which we see right now, companies have received valuation premiums long before meaningful AI revenues have appeared. Right. Even in India, we saw a situation where investors rushed towards companies because of names which was perceived to be of an organization. The most recent example of Modi ji going to Italy, the recent Parle Melody was a classic example of this, right? The pattern is remarkably consistent. Market don't just reward performance, they reward stories. Does it ring a bell? Think of it, right? Why does AI make all of this even more harder? The challenge becomes far greater when you attach AI into this equation. The traditional industries had tangible anchors, factories, oil reserves, stores, subscribers, cash flows. AI companies operate differently. Investors are trying to value future intelligence, future market power, future ecosystems, future business models, future everything, most of which do not fully exist yet. Which means today's AI valuations are increasingly based on assumptions about tomorrow. I think the real story is not whether Anthropic is worth more than OpenAI. The real story is whether AI itself is becoming overvalued. AI is undoubtedly transforming industries. Enterprise adopting is growing, investment are accelerating. But the reality is that AI is still, again, I'll be careful, AI is still not fully living up to many of the expectations which were placed upon it, right? And yet, the market continues to value AI companies as though those expectations have already been guaranteed, which raises, at least in my mind, a larger question. What if the market is overshooting itself? What if investors are betting too much on AI, where expectations can, rise much faster than reality? And history has shown that Yahoo once looked unbeatable, Nokia looked untouchable, MySpace looked dominant. Cisco briefly became the world's most valuable company during the internet boom. And in many cases, valuations were not measuring eventual winners. They were measuring the dominant narrative of the moment. Enterprise demand is strong, but consumer markets are equally important and cannot be ignored. And perhaps this is where the real uncertainty lies. Because, what you have to understand is today, many investors are behaving as though AI is unquestionably the infrastructure of future. But what if it isn't? What if AI ultimately becomes just another powerful tool rather than the foundation of a new economic era? And perhaps the most uncomfortable question of it all, what if AI itself comes crashing? Because if that happens, many of the valuations we see today may end up looking wildly disconnected from reality. Again, I'm not hoping for this, but this is a perspective that you need to think on as well. Have a great week ahead. Bye for now.